Hopefully it gives us a better YouTube video. Good stuff. It does sound techy, doesn't it? I tell you, that's about where I peak. So good morning, Ron and D again, and Troy. It's nice to see you in here, man. Rob, Adriana, Tooth Plumber. Man, Rob, you said my favorite phrase today. Good morning, Jeffrey. When you follow the rules, it's almost like cheating. Isn't that crazy? When you follow the rules, it's almost like cheating. And everybody has that little aha moment where they realize that they're working too hard, that they're looking for too much, that they're trying to make too many things happen instead of just going to the flow when it's happening. And guys, that's a huge point in education when you start to trust the rules, because it takes a lot of the pressure off of you. Takes a lot of the fear out of you. It takes a lot of the expectation away, because you're like, well, hell, every time I follow rules, more often than not, things work out. So, I don't know. I like hearing that. I love it when you guys post that. It makes me happy. Guys, if you watched 8:30 news today, it was crazy. That 8:30 pop, that was huge on the NASDAQ. If you were watching the NASDAQ, I'm not sure what it did. No triggers through all AM, Rob? What market? Show me a picture. Show me your large chart for whatever market you've been watching since 3 a.m. Sometimes there's not. Let's look. 3 a.m. Central. Didn't catch that one right there? That was at 418. That fib wasn't there yet. You had odds favorable, clear path. That was the update. That was a good looking one right there. But yeah, it hasn't been. Here you had a clear path and a pullback. And then it's been a little dicey ever since. So there may have been some opportunities in there, Rob. Let's do this. Let's circle a tail. And let's circle a tail. Because I believe Pete showed us a couple opportunities. And guys, this is all we're going to do. And what you're doing, Rob, is awesome. If you go back and study... what is this? Are you on your phone? Yeah, Pete's got it all in his post. Oops. Sorry. I'm not going to pay collections. Guys, this is a great practice. Even if you're not in front of the market... go back, take a picture, right? Odds favorable, everything's up, separated. There's that pullback directly to support inside of favorable large triggers. Guys, this is everything that I'm going to talk about for the first hour. This is everything that I look for every day. And then Pete, the only thing that I had was after 3 divergences, some people will choose to miss this one because of the termination condition potential of it, but then it just gave you another one right after to get up to the fib, and the fib stopped it. So absolutely beautiful. And then the perfect the perfect Pete fib bounce trade. I love that. You're sleeping, definitely worth commenting on. You know what's funny, Pete, is I can't watch the market trade into a 21 area now and not think that you're probably looking at it. It cracks me up. It's funny how that happens. I start looking at trades during the day and say things like, oh man, that's Pete's trade. That's Ron's trade. Zorro would be in here. Good morning, Morgan. So it's fun for me. Guys, every morning I check news because I don't want to get caught up in whatever emotional response may be going on. The 8:30 news, I got lucky. I was taking pictures for you guys. That happens sometimes, Morgan. But you did eventually wake up, so that makes today a victory. The market moves so fast it becomes untradeable in a lot of instances. And understanding when news prints gives you the advantage of not getting caught in that emotional response. At 10 a.m., guys, coming up in an hour, we've got the preliminary consumer sentiment. We have both high impact and medium impact, and that 10 a.m. news has the potential to make the market go crazy. So if you're in one of those prop firms, they'll usually tell you don't trade the news. And if you're trading your own accounts, you're really taking a chance, should you make the decision to do so. But only you can make the decision whether or not you're going to try to risk it or not. I've accidentally traded in the news multiple times and I have lost money every time. So that's my own experience for you guys. I'm going to go to the glossary of common terms. Only you can prevent forest fires. It's true, Morgan. You're showing your age there, Woodsy. Or Smokey. Smokey the Bear, not Woodsy Owl. Guys, let's talk about a high probability trend trade. Do I have any new folks in here? And I have people going, man, he talked about this yesterday. I'm probably going to talk about it Monday too, guys. A high probability trend trade means each indicator on every chart agrees for the trade. This would be that cheat code that Rob was talking about. You're going to have the strongest triggers and no termination conditions. You're going to have no trouble spots between you and your target, guys. We start everybody off with the high probability trend trade for a couple reasons. One, it's going to teach you patience. It's not a trade that happens trade after trade after trade after trade, guys. 90% of your day is spent waiting. 10% of your day is spent trading. But the high probability trend trade is a trade that typically wins 70 to 80% of the time. There's an old adage that confidence is the memory of success, and that's exactly what we're looking for here. Building that confidence, establishing that trust. In the high probability trend trade, the rules are designed to teach you to learn how to read your indicators, to get you to where you can become a chart reader. Hey, Kenan. And chart reading is, like I said, it's about 90% of what you do every day. There's some people that argue with me on that, and they say it's closer to 95% of what you do every day. And it really is. It's learning to sit on your hands and wait for advantages. It's just learning to do absolutely nothing when there's nothing to do. Your rules have come into play through hundreds of hours of study, market replay, live trading, simulation. And the high probability trend trade is a pattern that has been proven to win more than it loses, guys. Which means that every time you take this trade, it's not the outcome that you should be focused on, but rather the process. Because the process is what yields the results, guys. And once you're a chart reader, once you're good at this one trade, and I tell people, if you keep it focused, it doesn't have to take you longer than a couple weeks to understand the concepts and start seeing these patterns. You're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're also going to understand where the market is likely to stop. And you're going to use these in everything that you do with the high probability trend trades. So I'm a huge fan of don't think too much. Yeah, it's just like being at the beach. And you know what, Ron? As much as I love the beach, I love everything about the beach. It's one of my favorite places to be. I hate sitting still. You will never catch me just sitting in the sand doing nothing. You'll never catch me just sitting next to a pool doing nothing. I have to be active. The beach to me is a colossal waste of time if you're not in the water. I like to be doing stuff. So my brain, my beach mentality is not a good trading mentality. But if you're that person that can just sit there and do nothing, then you're good. Boogie boarding, we surfed when we were kids. Wrong stuff in your koozie, I guess so. As little as I drink, that would just be nap time and burn. Yeah, you guys actually have waves, Morgan. But guys, we're going to talk about these rules. Good morning, Zorro. This is the high probability trend trade. I'm laying it out in front of you right now, guys. The large chart needs strong trigger lines. That's rule number one. When rule number one is met, you're going to have the advantage of momentum. Your advantages are down here. Write down on a piece of paper. Take a pen and a piece of scratch paper and say, I need to speak to myself about advantages. Don't look for longs. Don't look for shorts. Don't look for trades. Don't look for profits. Look for advantages, guys, and talk to yourself. You either do or do not have momentum. You either have strong triggers or you don't, and let it be very absolute like that in the beginning. Rule number two says termination conditions false. No area is likely to stop the market. This is going to give you the advantage of a clear path. So momentum and a clear path. Guys, these are the two. These are the foundation. These are the concepts that so many trading plans revolve around. And rule number 3 is designed for the entry for the high probability trend trade. So your third rule is just capitalizing on momentum and a clear path, putting you in the market where the market is most likely to continue. These 3 rules, guys, they happen on only 2 charts. There is a large chart and a small chart. How technical is that? There's a big one and a little one, guys. The large chart is a slow moving chart. The large chart is very much a broad stroke of a brush, if you will. The large chart is painting the living room wall. It's just big fat roller and go, go, go. The most current bar on the large chart, guys, it's going to define the direction of the market. And it's really pretty simple. If the background is green, the market's going up. And if the background is red, the market's going down. And you brand new users, just go with the flow, right? If it's going up, you go up with it. If it's going down, you go down with it. That's the path of least resistance. The large chart's going to define the momentum. That rule number 1, momentum advantage, is going to come on the large chart. And then the large chart is going to define the areas in the market where the people in charge may be reacting to. And that's going to make sure that you have a clear path, making sure that there's nothing in your way. And once rules 1 and 2 are met, once those first 2 are in place, guys, your first entry comes in the form of the high probability trend trade. And you're going to use a small chart, a faster chart, a refinement chart. You're going to take this one bar, and the small chart's going to break it into about 20 to 30 bars. And by doing so, you're going to be able to pinpoint exactly where the market is likely to continue. You're going to have so much accuracy that you're going to wait for it with a limit order. And guys, this is going to reduce your risk. It's going to increase your profit potential. So let the large chart tell you that it's time to look for an entry, and then we'll use the small chart so we can have the least amount of risk and the highest profit potential. And guys, we do this 2-chart process because they're really nothing more than a representation of who's moving the market. There's a large crowd. They're going to define direction. They're going to establish momentum. They're going to create those trends and react to those areas. And then there's a small crowd, and these guys have enough money to create little shoves against what these guys are doing. But these guys fail typically 70 to 80% of the time. You're going to be able to pinpoint exactly where they're the most likely to fail, and this actually becomes your entry to go with the large crowd. So guys, we're just going to keep it pretty simple today. We're going to go 2 charts and 3 rules. I'm going to talk a little bit how to get to where you want to be. And guys, this is so important. Post your trades in class. Post your questions in class. One of the things that happens is as you try to learn something new, your ego is going to tell you that it's not okay to be new. Your ego is going to tell you to not ask that question in front of strangers. Your ego is going to tell you that you should know this by now. Don't raise your hand. And I know this is true because I'm working with a friend of mine right now, and rather than asking me questions, she is assuming knowledge. Or he is, I don't want to call anybody out. And what happens, guys, is you hear a concept in class and you create your own truth. Mark said strong triggers. This is what I think strong triggers is. And Mark said no termination conditions. And this is what I think no termination conditions are. And what happens is you're going to create a language that's familiar to you that may or may not be correct. And I think that we've all done it, misunderstanding concepts, whether it's in trading or anything in life, right? And what happens is if you post in your room, if you post in this room and you say, hey, Mark, this is what I see, and this is where I did what I did, and this is why I did what I did, my whole job, the joy that I get out of every day comes from helping you become a better chart reader. So if you're identifying momentum and there's a challenge with the read, then we'll turn that into an immediate lesson on momentum to make sure that you have clarity. The same is true with that clear path. The same is true with entries and even exits, guys. We'll work on management together. So every time you post in the room, you're literally getting a private session with me. You're getting a personalized approach to what it is that you see, making sure that you see it correctly, and then together we'll work to get you exactly where you want to be. That's my commitment to you guys, is giving you feedback on everything that you post. If you don't post, I don't know if you need help. And guys, if you suffer silently, you are going to suffer. The next thing is use the spreadsheet. And I've fought this one tooth and nail in the beginning because it felt like a lot of work, I'm not going to lie. But the spreadsheet, so Nexgen gives it to you. It's in your study picks folder. I give mine in every day. I update my spreadsheet every day with the brilliant things that you guys do in this class, whether it's a lesson on termination conditions, whether it's just a beautiful trade that needs to be shared. I steal pictures from this class all day long. You should do it too. And there's 4 tabs on the spreadsheet. The first one is copy of my tracking. This is your trade journal, guys. This is where every time you take a trade, you're going to drop it into that spreadsheet. You're going to talk about what kind of trade it was. You're going to talk about how you felt, what you saw, what your result was. And then even more importantly, you're going to put the notes from the feedback in class right here. Because a lot of people will take these trades and they'll be like, oh my gosh, I lost. What did I do wrong? And it's horrible and I can't believe it. And then you post it in the room and I'm like, dude, you had momentum and a clear path. And you took the perfect entry. And this is actually one of those trades that's a part of the 20 to 30%. And then suddenly you don't feel so bad about the loser. You're like, well, man, I did it right and this is great. But if you hide that loser, you might think that you've done something wrong and you might start trying to self-diagnose. And if you've ever gone to WebMD because something hurts, you have cancer and you're going to be dead in 3 days. Always. You'll always turn it into more than it is. So give it to me. Get that feedback. Ask yourself every day what worked and ask yourself what didn't work. And you'll start to recognize patterns in the market that are bringing you success. You will recognize patterns in the market that are taking that success from you. Guys, when you follow the rules, it feels easy. You will be relaxed once you trust the rules. You won't have those butterflies that you have right now. Your palms won't sweat. You won't fidget with your screen over and over, trying to give the market more room to go to your target. And the same is true of feeling forced. When you know you're breaking your rules, guys, even if you don't say out loud, all right, I'm taking it anyway and I broke my rules, you're going to find yourself adjusting your stops, adjusting your targets, trying to protect yourself from your own bad decision. So use this spreadsheet. Go through and really come back and study these every day. Set yourself up. There's a favorite looks section where as you develop a trading plan, you're going to take pictures of what it looks like to take your trade. You're going to take them, you're going to annotate them, and you're going to have so many pictures of your perfect trade in here that you're literally going to go, man, I know exactly what it looks like to go in. I know exactly what needs to happen. All I need now is a live market to wait for this pattern. I'm going through that process right now, guys. I'm going through that process with my brother on the TradingView platform, and we're trying to come up with plans. So every one of these is all TradingView, guys, and I'm taking 15, 20, 30 pictures a day as I try to develop a plan, as I create this folder, this catalog to do new things. I go through the exact same process you guys go through. I take my pictures, I annotate my charts, I come back and study them, and I develop confidence in the plan. So anytime I learn something new, that's my process. Once you figure it out, you're going to start filling it up. You're going to start learning how to manage. You're going to see patterns that repeat themselves. And then the client trades, guys, this is where I've gone through and I've stolen your pictures and I've said, oh my gosh, these next-gen users are doing great things with the software. They're embracing momentum. They've identified clear paths and look at these amazing entries. Let me put this on a tab so that all of my new users can come through and start clicking on these links and seeing the similarities with the trades. For the high probability trend trade, you have the sequences for entry as well as a very basic management plan and a lot of ideas on great management, getting you to be able to grab bigger profits. Patterns that repeat themselves, guys. You're going to see the same thing over and over. There are pictures in the user guide that were taken back in 2020 that are just as valid today because these patterns have been repeating themselves for decades. And there's a whole section on where the market may stop. I would recommend looking at that one. That is the most broken rule out there. So guys, we're going to go through, where's my picture here? You guys are going to post all day long, like Erla just posts, like Josh just posts. You're going to show me what you're doing. You're going to talk about what you see. We're going to take the first hour or so to learn the trigger line and Fibonacci rules for when it's okay to trade. As a brand new user, you probably won't follow the rules. How could you? You don't know them well enough yet. So it's important as you're learning, as you're striving towards following those new rules, to simulate, to post in the room. And we're going to work together to make sure you get to the point to where your rules are correct, that your entries follow a pattern that has been proven to win more than it loses, guys. Statistical advantage. Having a trade where if I take it 10 times, I know through study that it wins more than it loses. And what that does is it builds trust and it reduces the fear in what you're doing. We're going to simplify. We're going to use our chart reading to identify the rules met for a high probability trend trade. And then we're going to take our chart reading a little next level, and we're going to introduce you to what's called a medium probability trade. And a medium probability trade means that most of your indicators line up for the trade. However, an issue exists, which means that you may not have a clear path. So the trade that I'm going to introduce you to is void of a clear path. Sometimes you may not have momentum. Sometimes your entry area might be a little skewed. So what you're going to do, because you're talking to yourself in advantages, is you're going to say out loud, scare the dog, I have momentum, I have clear path, I have an entry area, I know this is a trade that typically wins 70 to 80% of the time. Or you'll say, I don't have the best momentum, but my path is clear and I've got a well-defined entry area. I know that I have to use my chart reading to manage a little more aggressively, because with one advantage gone, it becomes a medium probability trade. So we're going to cover both of those. You've got to learn the looks. What looks are you going to commit to? You've got to study them. You've got to take pictures. You've got to build a database of them. And what happens is they start to look easy, guys. You find them in the moment. There was an interview, and I love this story. It was brand new NFL quarterbacks, and they were being interviewed. And the question being presented was, what's the biggest difference coming to the NFL? And every one of them said, it's so fast. It is so fast, it's hard to keep up. The linemen are faster, the receivers are faster, the defense, everything is faster. And then they pan over to Tom Brady, and Tom Brady's like, it's pretty much slow motion at this point. I have the repetitions, I have the experience, I have the time. He goes, nothing surprises me anymore. And guys, trading is very much the same way. The more seat time you have, the more time you spend studying, the more time you see a pattern, the slower the market tends to move. And it's a pretty cool little phenomenon. So we are going to talk about 3 rules today. That's it. Just 3. Momentum, clear path, and entry area. These are your advantages, guys. Large chart leads the way. Large chart's going to give us rule 1 and 2. And the first rule is strong triggers. Strong triggers, when the background is green, when the market's going up, the only way you can have strong triggers is if the trigger lines match, that's crazy. If the trigger lines match the color of the background, guys, everything's green. Or if it's going down, everything is red. My mouse is moving super fast. So the colors have to match. That kind of makes it easy for you. When your small triggers, the solitude lines, break above the large triggers, the dashed 2 lines. Picture scissors opening up, getting ready to cut. It's the space created between the two. It lets me know that the odds are favorable for the market to continue up. Or in a downtrend, when the smalls are below the large, everything matches, the space is there. The space between the two lets me know that the odds are favorable for the market to continue down. So we're going to refer to strong triggers, that advantage of momentum. We're going to call it odds favorable momentum, because the odds are favorable for it to push up or for it to push down. My mouse is going nuts. Sorry, guys. Odds favorable momentum. This is the first advantage. Odds favorable momentum pushes that market. It can break key areas. It can cover mistakes. And guys, when I have odds favorable momentum to the upside, I'm going to pinpoint on a smaller, faster chart where the market is most likely to continue. That becomes my entry. On a large chart, that single bar, it looks like a tail. Either way, you're literally going to be able to pinpoint with that refinement chart exactly where that tail is most likely to form. And that becomes your entry for the highest probability trend trade, guys. So it's a pretty simple look. Let's go to the large chart. Odds favorable. Small's outside of the large, larger up, everything's wide. Do you guys see it? This is a market that's likely to continue in the direction of the trend. This is momentum that broke key areas, and some of you pinpointed exactly where that tail was most likely to form using a smaller, faster chart, and that was your entry to ride momentum up to the next area. There's odds favorable to the downside, and guys, on the most current bar, can you give me a Y if you see it? The small triggers are above the large triggers, space is there, they're wide. Rule number one is in play on this crude oil market right now. We have odds favorable momentum to the upside. Do you guys see it? This is a big one, guys. This is the one that you don't want to miss. Here, let me blow it up and pretend like you guys are listening. Do you see the separation? That's it. Can you guys hear me? Is it going to be one of those days where I talk to myself? I'm cool with that. Remember, guys, I know this stuff. I'm pretty good at it. My goal is to get you good at it. That's odds favorable. So when those small triggers come back, work their way inside of the large triggers, guys, those scissors close. This is called a weakening of the large triggers. And when the large triggers are weakened, anything can happen up or down. You even say to yourself, anything can happen up or down. And you start talking to yourself in terms of advantages. I have odds favorable momentum. I'm at that weak, that anything can happen. And guys, this is where you see bigger retracements. This is where you see reversals in the market. This is where you start to see fights between buyers and sellers. So having a pretty good understanding, space between the two means strength. Once those scissors close, the advantage is gone. And you're going to see it annotated on charts all day. Anything can happen. ACH, those weakened triggers precede a reversal. Creates odds favorable momentum. And there is a tail where you're going to pinpoint. Morgan, I was having some struggles with it earlier. Try and kill it. Go through processes. Try to kill it on your task manager. A lot of times that'll help out. Takes it up to anything can happen. Odds favorable. There's a tail. And then, guys, this is a transition. I like to make a point of reminding you guys that the colors have to match. To have strong triggers, the colors have to match. The background and both large and small triggers, they've all got to be the same color. So when you find yourself in a position where maybe the large are down and the smaller up, or both triggers are down, but the trend is up, guys, this is buyers and sellers fighting. You're going to see this a lot in between key Fibonacci areas. But this is just you saying rule number one isn't met. I don't have odds favorable momentum. Good morning, Gary. There's no rules met. I don't have a trade, guys, but this is where people tend to begin to predict, to hope, to wish, to want, to pray that market does what it's supposed to do, or at least what they want it to do. But the market doesn't care about you. It's kind of cool. The market doesn't care if you want it to go up or down. The market's going to do what it does. So we're going to sit on our hands and we're just going to wait. We're going to wait for odds favorable momentum. We're going to look for our advantage. Is everybody good with rule number one? Strong triggers on the large chart. The advantage of momentum. Guys, there are plans built around nothing but momentum. There are people, their sole purpose in life is to wait for momentum and then capitalize. You may become one of those people, but it's a good idea to learn the clear path. What's the clear path? What does that mean? That means that there's no termination conditions. That means that you have room to your profit targets. Why do you need MACDs for your NT8, Gary? You don't need them because the software does every calculation you would ever use them for. That's why it's not written in the software, because John automated the reading process. Can everybody hear me? Okay. So guys, rule number two, don't complicate things, guys. Don't make it harder than it needs to be. Zero advantages for adding MACDs. You don't need them. Termination conditions false. Room to the profit targets, guys. All this is lines on a large chart. And I say lines on a large chart every day because I don't want you to convince yourself that one is more important than another. These lines on the large chart can cause trouble. These lines on the large chart are where the large crowd are likely to make decisions. These lines can stop the market. These lines can create big untradeable bounces. These lines can be problematic, guys. So we're going to use the trigger lines, the same ones that create momentum, and they're going to let you know if these areas are likely to stop the market, if these areas have the potential to break, or if these areas are broken. And then, just for example, Pete Woodsworth, this is not a perfect high probability trend trade. It is directly into one of those lines that have the potential to stop the market. So guys, we're going to look for divergence highs like is happening on crude oil right now. We're going to look for divergence lows, red resistance, blue support, yellow 1-to-1s. And guys, we're going to use the trigger lines to tell us if they're likely to stop the market, if they have the potential to break, or if they're broken. So everything begins with price reaching an area, guys. Price reaches the area, whether it's a fib, a 1-to-1, a divergence high. We're about to come revisit that one. All you have to do is ask yourself, where are my triggers? Guys, if your triggers are below that area, resistance is likely to stop the market. It may reverse the market. This is what we call a termination condition, and it means absolutely no more long trades. If price trades down and hits Fibonacci support, all you have to do is ask yourself, where are my triggers? And if they have not broken through, if they remain above support, ladies and gentlemen, you are trading directly into a termination condition. You're trading into an area that may stop the market. You have not met rule number 2. The path is not clear. Does that make sense, everybody? It's not a difficult concept, especially if you go back and study it a little bit, because price reached Fibonacci resistance, and look at the reversal, and right into Fibonacci support. Support holds again, and guys, directly into that divergence high. You did have momentum. Some of you might have taken a chance on it. You don't have these 1-to-1s on your chart? Pete, what time frame are you in? Let me look. What's your timestamp say? Oh, well, that's why right there. So Pete, your midnight and my midnight are 3 hours apart, which means that we have different swings, which means that right now, so my software started creating swings and taking measurements at midnight, right here. Your midnight wasn't until up here. So guys, if you're not in Eastern time zone, the likelihood of us having the same fibs, the same swings, all that stuff goes down. But give me a Y if you see it. Someone said that this was the perfect high probability trend trade. Does everyone see how price reached that divergence high? The triggers didn't break, and holy smokes, look at the market just rocketing down off of it. Rule number 2 is designed to keep you safe, guys. Rule number 2 says if you reach one of these lines and the triggers don't break, to sit on your hands. That is a termination condition, 100%. And then the opposite of no clear path has got to be clear path. Your path is clear when both the small and the large triggers get through the area. When both the small triggers and the large triggers get south of support, guys, it behaves as resistance. The path is clear, the area is broken. We're going to look for opportunities to take our short trades, but the rules are met. When the smalls and the large break above resistance, it behaves as support. Guys, we're going to look for our rules to be met. Once again, just to beat a dead horse a little bit, look what happened off of that perfect termination condition, that no triggers through. How much money could you lose trading into an area that has the potential to stop the market? Guys, everything that I teach, every rule that has ever been created for Nexgen revolves around an awful lot of study and giving you the highest chance of success. So for brand new users, it's either a termination or it's broken. And there's no other option for the first 20 days because that keeps it easy, keeps it focused, keeps you working on becoming a chart reader. Once you're a chart reader, you're going to get introduced to your medium probability scenario, guys, because the potential to break is very real. An area is break all the time, usually with odds favorable momentum. So when your small triggers absolutely smash through an area, but your large triggers are lagging behind, 50% of your triggers have made it through, 50% of your triggers have not. Very cleverly, we call this a 50-50 look. Has nothing to do with your chances of success, guys. This lets me know that key Fibonacci areas have the potential to break. But since it's only the potential, the path isn't clear. And if the path isn't clear, then rule number 2 isn't met. And guys, remember we said we're going to talk to ourselves in terms of advantages. If I don't have a clear path, well then I sure as heck better be insisting on momentum in an entry area. And I'm going to give you a plan that'll allow you to capitalize when you're comfortable reading your indicators on these potential to break areas. So absolutely no triggers, no trade, the path isn't clear. Once the triggers break, let's look for our rules to be met. And then you're going to work your way into your second trade, which is this 50-50 look, which is a medium probability. And guys, that 50-50 has the best chance of winning if it's coming from a strong top or bottom. And Steve Diego, you've got yours set to Eastern. I'm in Central. When I was going up and down the West Coast, I was still Eastern. So at 6 in the morning when I was starting my classroom, my computer said 9 a.m. And I just wanted to have the same midnight as Nexgen. I wanted to have the same midnight. And that way, you know, I'm looking at the same thing that my brother's looking at. The same way you guys can look at the same thing I am. Guys, this is a phrase that you're going to hear a lot. Strong top or bottom. Strong top or bottom for the brand new user means that price reached an area and every trigger remained below. That creates a termination condition. Textbook. If from that termination your large triggers pinch, change colors, go the other direction, we're going to call that reversal. Now it's a strong top. So if everything is red, it hits support and it pinches and rolls. Now it's a strong bottom. Guys, strong tops and bottoms set you up for the highest probability scenarios after them. That was hard to say. Because what does it mean? And I love talking about the whys because I think the whys are important. The buyers were in control. They were killing the market to the upside. This market had full tilt boogie going north. And then when they hit this key area, the decision that was made was so powerful that the triggers couldn't break. The decisions that were made were so powerful that it stopped the market cold and reversed it. Either the buyers gave up or there were so many sellers the buyers didn't have a chance. Guys, when you have an impactful decision right at a key area that reverses the market, these trend trades tend to go further, guys. Areas have the potential to break more. Those 50-50 trades have a higher chance of success. So strong tops and bottoms. It's a really cool concept, and it doesn't guarantee a win. But when a termination reverses the market, it's a strong top. Pretty cool, right? All these lessons coming in. And now this area has the potential to break. And we'll see if it does or not. I don't know. I never know what's going to happen. Is everybody good? Termination conditions, lines on the large chart. The most broken rule, guys. The most broken rule, trading in termination conditions. That was my deal. Everybody has a thing. Everybody has something that they do to fall outside of the plan. Mine was trading in termination conditions. I very much believed that I could use the force or something and make these things break at will, but it turns out that I couldn't. 60% of the time they worked every time. So lines on the large chart are detrimental, guys. We're going to use them on a small chart for entries. But there is one termination condition that I will respect on a small chart. And that's 3 divergences in the same price range. Anytime I see 3 divergences on the same price range, it lets me know that the market may reverse, that this may terminate the trend. Divergence is nothing more than a loss of momentum. When you see this cyan, this light blue line print from a pivot, the market comes down and right about 3 bars in, this line prints if momentum is dragging. If you see 3 losses of momentum, 3 divergences in the same price range, it may terminate the trend. It becomes even more powerful when the small triggers work their way inside of the large triggers, those anything can happen triggers, guys. It adds fuel to the fire because now you're seeing momentum dropping through divergence, and you're also seeing it with weak triggers. And then it becomes even more powerful when that final pivot is higher than the previous or lower than the previous from a high. And this lets me know that not only is momentum dragging, but they couldn't even push price down to the same level. And it makes it more powerful still, guys. You'll see this on the small chart or on the large chart. When you have odds favorable momentum and a clear path on that large chart, you're going to come look for your entry and you'll be like, ah, oh, son of a gun, 3 divergences. I'm going to choose not to take that trade because my advantage of a clear path is gone. That is the only one on a small chart. Everything else is lines on a large chart. And guys, these large charts are going to make you embrace that 90%. That large chart is going to make you say to yourself, I don't have a clear path. I don't have the momentum. 90% of your day is going to be letting the people in charge fight it out until finally one of them is victorious and gives you your advantages so that you can look for an entry. And when the market consolidates, rule number 2 typically keeps you out, right? Rule number 1 typically keeps you out. And I like to say this every day, and you have to work through it to believe it. I'm not going to lie to you. Don't take my word for it. But the difference between successful traders and unsuccessful traders, in my experience, I'm not spitting out gospel truth here. This is the truth according to Mark. The ability to do nothing when there is no advantage present, guys, that's the difference between success and failure in most day traders. Not forming opinions, not taking chances. The most successful day traders that I know do the same thing every day. They do 1 or 2 things every day, and they do them really well, and they never falter. There's a million ways to make money in the market. Find the one that speaks to you and commit to it, because the reality is you don't have to make $1,000 every day to have a 7-figure income. You need to be able to capture 300 to 500 a day, and then just use a trade multiplier. Less trades, more contracts, best trades. So guys, rule number 2, clear path. I love it. And once you know how to identify momentum and couple that with a clear path, well, now you just have to find an entry. The high probability trend trade entry, guys, we're going to use that small chart. We're going to let the small crowd fight. And your entry is going to be so precise that you're going to use a limit order to buy or sell a pullback, that little shove from the small crowd. And that limit order is going to be waiting at an area, fib midband yellow 1-to-1, a line on the small chart. And that area needs to be inside of triggers, guys. So we use that 2-chart process. When the large chart says down, when the large chart says momentum, when the large chart says clear path or the potential to break, you're going to be able to refine on the smaller, faster chart to take an X-ray of price action inside of this one bar and pinpoint exactly where the market is most likely to continue. You're going to understand where that bounce point is. It's going to help you determine where your stop should go. It's going to allow you to reduce risk, and it will let you maximize potential, guys, because you're making decisions to go short all the way down here, but you're going short all the way up here and just riding that momentum down, guys. Great entries will create manageable trades, and there's a recipe to finding that best of the best spot. But I like to share this because triggers are moving averages, and the large triggers on both charts are very slow moving averages, guys. And for whatever reason, I don't know if it's elfin magic or garden gnomes or whatever, it's probably math, but price loves to return to these large triggers. Price returns to these large triggers very often. It does it on the large chart, and it does it on the small chart. So in order to create the most precise entries, guys, the large triggers from the large chart have been superimposed onto your small chart. We call them the synthetic triggers. And on your entry chart, when the large triggers and the synthetic triggers overlap, one on top of the other, like 2 snakes riding piggyback, Guys, this is what we're going to call favorable large triggers. Again, I loved listening to the words to describe the advantages. Favorable large triggers, guys, because when these trigger lines are one on top of the other, you only have one correction point, one place where we expect price to come back to. And then when you shoehorn some areas inside of it, you give that price something to bounce off of. So it's these areas inside of favorable large triggers that create the highest probability entry for you guys. So when everything is up, when you have momentum, when the path is clear, your small chart's going to look like this. Everything is screaming to the upside, and your guts are going to tell you, jump in, Muser. Jeffrey Dean, jump into the market. It's going to go without you. And this little voice, and it's going to sound like mine, which is probably annoying as hell for you guys. It's going to say, no, the market moves in fluctuations. Let's go to a smaller, faster chart and wait for the reversal bar. Wait for the other crowd to fight. And guys, this reversal bar signals the beginning of a pullback. This is a loss of momentum. This is the market telling you that the fight is on. This reversal bar is not your entry. At the time of this reversal bar, you're going to look to your triggers and you're going to say to yourself, are they one on top of the other? Are they favorable? Are they wide in the direction of the trend and overlapping? And if they are, that's still not your entry. You're going to look inside for fibs, mid bands, yellow 1-to-1s. And these areas are the brick wall that we expect price to bounce off of when they're inside of that correction point, inside of where price is most likely to return. And you'll create what's called the window of opportunity, from the highest point of support in a long trade to the lowest point of support inside of favorable large triggers. This shaded blue box represents the point where the market is most likely to continue. And guys, it's an area. It's rare that it's just one tick wide. Sometimes it is. But guys, it may go from the mid band. It may go from the 1-to-1s. But this fib beyond the correction point, past where we expect price to correct in those large triggers, this is not a part of the window, not a part of the equation, guys. And this is actually about where your stop is going to go, because you're going to say to yourself, if price can push past these areas, past these triggers, hell, I don't know how far they can go. I don't want to be in that trade anymore. So you're going to activate a limit order about 2 ticks above the highest point. Because of the momentum in the clear path, we don't expect the small crowd to get a lot of work done. And that's your entry for the highest probability trend trade. When everything is screaming down, and the market is just tanking, and you have that odds favorable momentum, and the path is clear, and you're nervous that you'll never make any money because it's just not giving you your entry, suddenly the small crowd fights. You get that reversal bar, and you don't enter on the reversal bar because that's not your entry. Your rules say once the reversal bar prints, let's find the triggers, and let's look for those lines within. Guys, one line, a mid-band, inside. Your window of opportunity is 1 tick wide. Your job is to activate a limit order just below that lowest point of resistance and pray that the small crowd gets there and gives you your entry. And all of these lines beyond the correction point, beyond those triggers, are not a part of the equation, guys. Things have gone south once you get up there. So you're not entering on the reversal bar. You're not entering on where it hits the triggers, but rather you're allowing it to bounce off of an area inside of favorable large triggers. And guys, that's your best of the best. And once you learn where the market is likely to continue, you know exactly where your stop should go. 4 or 5 ticks beyond those triggers. But with all those advantages, if you get a reversal bar, guys, you can minimize risk a tick or two above, a tick or two below. And it's not uncommon to see you guys take perfect entries for that market to give you a reversal bar, to see everybody reduce their risk. And maybe it's still a part of that 20%, but the little fight at the area inside of favorable large triggers gave you 3 or 4 ticks of risk, and your losses are minimized. And that is one of the advantages that these entries do for you. So you've got to study them. You've got to understand momentum. You've got to make sure you get the idea that if price hasn't reached the area, it's a target, not a termination. And when you see this on the large chart, you're going to develop the patience to wait for the area inside of favorable large triggers. Guys, if I circle a tail on the large chart after the fact, and it lines up with an area inside of favorable large triggers, this is your look. This is the picture that you're taking. This is what you're committing to memory. Because if you see this look 100 times, here's one from the spreadsheet, the exact same look. Another one from the spreadsheet, the exact same look. Guys, what happens is these looks become easy and effortless. So that's the high probability trend trade, guys, every day. Are there any questions about it? You guys want to see what that circle looked like on a smaller, faster chart just for grins? There's two circles. Let's go see. Dun, 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 dun. There's a pullback to support right inside of favorable large triggers. Do you guys see it? It did it again. This is your pattern, ladies and gentlemen. You can scroll back and study this pattern. When I have odds favorable momentum, when the path is clear, circle a tail. What's it look like on a smaller, faster chart? Well, this one made it to the triggers. It didn't quite make it. If you got in at the highest point, you tried it as a momentum trade and it still stayed inside of that correction point. So you scroll back and you look for your rules to be met again. And there's one of those potential to breaks, right? So we go back and we look. Whoops. Right back to support, right inside of favorable large triggers. And if it missed you, there's one more just to get you in. Is everybody good with this? Because this is all you have to study for literally 20 days. And you'll be amazed. And then Pete, no disrespect, but your perfect high probability trend trade, let's see which one that was. Termination, reversal, odds favorable, directly into a termination condition. But guys, I want you to see the pattern that you're going to be able to take advantage of with a little bit of chart reading. And I know exactly what Pete was thinking. Pete says, Mark, from this termination with that level of momentum, I know that this line is problematic, but look at my small chart. I've got odds favorable momentum. I've only got a couple lines inside of triggers. Everything says up. And guys, you might take a shot. Once you learn your rules, you might know when it's okay to bend them a little bit. And I can tell you, Pete is a competent enough trader to enter this trade and to understand to get paid up here, right where it started retracing from. But if you're a brand new user, you may try it into this one, or that one, or this one, and you're not going to have the chart reading behind you yet to know when it's okay to make an exception. So I wanted to hit both sides of that. I wanted to say, dude, it's a termination, but I love to look at advantages, and I love to stack advantages in my favor and see if it's a good time to maybe break a rule. And I don't advocate breaking rules until you can follow them and make money consistently, but you will change your plan based on your ability to read your indicators. So let's give all the Friday gifts, guys. I'm going to start dropping things into the... I'm going to start dropping things here into the, the chat box. So once again, there is my spreadsheet. Guys, take it. Study it over the weekend. I'm giving you the PowerPoint that I just taught the high probability trend trade with. Go back, grab the pictures, make sure you understand them. And now I'm going to give you this one. This is the one section that I didn't show you on the spreadsheet. This is Chart Reading 101, guys. Chart Reading 101. I just dropped it in the room. Let me pull it up for you real quick. And what Chart Reading 101 is exactly what it sounds like. This is a drill designed to get you comfortable with what you're seeing on your charts. This is a drill designed to turn you into a chart reader, making your focus be on advantages, guys. Because in order to catch these trades, to understand these advantages, to turn them into profits, you got to be able to recognize some patterns, and you've got to be able to do it quickly because the market is moving, right? It's easy when nothing is moving. It's a little more difficult when everything is cranking out. So this is going to reinforce the lessons that we teach every day. It will speed up the process of recognition, guys. And it's not a difficult task, but everyone seems to avoid it like the plague. Probably because it feels like work, and you guys are so darn smart. But if you take 25 pictures of strong triggers, of weak triggers, of a clear path, of a termination condition, if you do this, it needs auto link opening permissions. I don't know what that means, Morgan, sorry. Guys, if you take pictures of these simple concepts that we teach every day, and you annotate on those pictures the whys, why is it strong, why is it a termination, why is it a clear path, and you resort that back to the rules that they embrace, this 101 section, guys, I've done 90% of the work for you. Go do your part. Strong triggers, weak triggers, clear path, termination, 50-50, entries. If you go through this process and take 25 each, guys, I did most of this. It was about an hour on a Sunday morning. I had gotten this up to 15 pictures in each one. That's not a huge time commitment to become a better chart reader. That's not a huge time commitment to slow the market down. Go through this process or skip it. I mean, it's up to you. But you will get out of the software what you put into it, I promise. So that's the one thing that I want to give you. It's great weekend homework, great to do, drink a beer in the afternoon. Have a good time, guys. And then if you need any help with it, I'm also going to give you checklists for the high probability trend trade. And that's all this first page is on this document. Print it out. And if you print it out, you put it on your desktop. And every time you're looking for a trade, your rules are in front of you, exactly what they mean. And if you're not sure what they look like yet, if you're brand new, you're still studying, scroll down to the second page. There's that strong top or bottom. You also have all of these in the PowerPoint that I gave you. There's that odds favorable momentum. There's anything can happen, those weak triggers. That's a termination. That's the potential to break. That's broken. And windows of opportunities, guys. So this high probability trend trade checklist, one to print out, put on your desktop. The second one to make sure that you understand the looks. And the same rules that are on this checklist, guys, if you start typing those onto your charts when you're taking trades, you're going to put yourself in a position where you end up never breaking your rules, because you're going to have to talk yourself out of whether or not it's odds favorable momentum if the rule is broken. And eventually it just all becomes clear. And all of this chart reading, look at that termination condition. All of this chart reading is going to come out of the KISS plan, guys. This is the Keep It Simple Sunshine plan. This plan is it's a stepping stone, guys. This isn't the end of the road for anybody. But this is the plan that is designed to make you a chart reader. This is the plan that's going to optimize your chances of success with the high probability trend trade. This is the plan that's going to optimize your chances of success with that 50-50, that medium probability trend trade. This is the plan that has brought brand new users to getting funded in those prop firms within their first 30 days with me. This is the plan that has brought experienced users back to consistency by keeping it simple and focused. This is the plan that teaches you to read your charts, guys. And then through simulation, through study, through class feedback, and continuous practice, you might change your plan a little bit based on your ability reading the indicators. You won't need to, but you probably will, because everybody starts to see more. Your simple plan for consistency: never fight the large chart. Don't fight the momentum, don't fight the direction, don't fight the areas. Guys, just admit to yourself on day one that you're not in control. When I closed down my TradingView app yesterday, it gives you a message every time it closes down. Yesterday's message was the market doesn't care about you or your position. And it's so true. The market, pardon my French, doesn't give two shits what you want. The market's going to do what the market does every time. If you learn how to harness the advantages it provides, if you take a little bit, just your money, out of the moves that are created before they reach the next area, there's an enormous amount of success waiting for you. So you've got to define your entry, guys. Your entry is the basis of a good management plan. Your entry creates manageable trades. It reduces risks. It maximizes profit potential. In this KISS plan, I give you pictures of everything. But then your management, right? That's the second piece of the puzzle. The entries, most of you are going to get pretty quick. Management creates a pucker factor that just drives people crazy. Management means that you have something to lose. Management means that you're in a position. And if you allow your management to be as emotion free as possible, if you allow your management to be as mechanical as your entry in the beginning, you will create a plan that's tailored to your goals based on your experience reading the indicators. You might move your stops a little differently. You might hold your trades a little longer. But in the very beginning, guys, let your entries be high probability entries. Let the market take you back to the area inside of favorable large triggers, because once you understand where the market is likely to continue, you will have clarity on where the market shouldn't go. 4 or 5 ticks outside of that window beyond those triggers, guys, that's the ideal stop. That is the one that says, hey, if the small crowd has it in them to get me, let them get me, but I'm going to make them work for it. I'm not going to put a stop where the market is likely to continue. And guys, if they don't hit your stop, well, then you're probably going to get the reversal bar, right? It's got to go the other way, which is confirmation of the movement and the direction of the trend and the direction of the momentum and the direction of the clear path. And you will, it's nothing but if then. If your initial stop isn't hit and you get a reversal bar, then your new stop is 2 ticks above it, or in a long trade, 2 ticks below it. And guys, there's nothing for you to do. You've got to take your hands off the mouse. You've got to put them under your butt, on top of your head. You've got to put them anywhere other than that mouse, because you're either going to get stopped out for a smaller loss, doesn't really sting when the advantages are there, or it's going to go to your first target, and you never know what it's going to be. You're only working the process. You have no idea what the result's going to be, but more often than not, because this is a pattern that's been proven, tested, everything, you have trust in it. Guys, it's going to hit that first target, $100. Such a small target, such a quick target. I've seen people on crude oil hit their $100 target before the reversal bar ever prints. It's kind of cool. Feels good when that happens. So you're $100 in the black. And you're going to move your stop to break even, which is probably not the best stop. But we're keeping it mechanical, because when you have nothing to lose, when you've already been paid, it makes it easier to hold for the second target. And the second target's only $200 from your entry, guys, which means that on 2 contracts, the perfect trade, this becomes a $300 result. And a $300 result, if you stopped there every day, 1 trade, $300, and that's the best you could do every day for all of your efforts, that's over $72,000 a year in your account. Over $72,000 based on a $300 trade. And Paul W. posted a great picture this morning where he was looking for a lot of trades, and he said, you know what, I'm just going to add a couple contracts on the best trades instead of trying to create more trades. And guys, that's really how you get to where you want to be. It doesn't take home runs to become a successful trader. 4 base hits is a home run. And I want you guys to see this, and then we're going to end the first hour here, and I'm going to go take a break. And I'll drop this in the room for you. Your daily goal, multiply it by 252 trading days a year, guys. If your daily goal is only $100 a day, it's a pretty low goal. Most of you could probably hit that without even trying. That's an extra 25 grand. If your daily goal is $500 a day, that's $126,000 a year. If your daily goal is $1,000 a day, it's over $250,000 a year from $1,000. And guys, the cool thing is, you met your goals 3 times a day? Nice, Andy. $100 a day, right? Andy, what's your daily goal, can I ask? Because I think you've hit it every day this week. 300. So guys, I want you to see this. $300 day creates a $1,500 week, creates a $6,000 month, creates a $72,000 year. From $300 a day. But here's the thing, guys, trade copiers are real. And if you make $100 a day, that's it. Super easy. Andy, you could do that with your eyes closed. But do it on 10 accounts with a multiplier. It's the same as making $1,000 on just that one same trade. Most trade copiers allow 20 accounts. I believe the one my brother is coding for the Nexgen funding will allow 20 accounts. Could you imagine taking one $100 trade a day and making $2,000 a day on it? Pretty amazing, right? Guys, it doesn't have to be more trades. Take the best trades. But here's the deal, Kenan, and I gotta say this out loud. If you're focused on the money, if you're focused on getting paid, if you're focused on beating the system and grabbing every move and you're not focused on the process, it's going to become difficult when you chase all the money, right? You walk into the bank, Rob loves this one. When you walk into the bank and you say, give me all the money, guys, you get tased, hogtied, maybe shot, and you're a bank robber. But if you walk in and you say, hey, may I have my money, please? Can I have those 3 rules being met for the high probability trend trade? Can I take a little chunk out of the market today, multiply it on a copier, find that success through simplicity? Guys, then you're no longer a bank robber. And that's how you get to where you want to be. That's the easiest way. When I tell you guys that when price reaches Fibonacci support and the triggers don't break, look at the bounce. 3 divergences, 4 divergences in the same price range. Look at the bounce. You've got to go back and study this so you believe it. Guys, and I'm going to say it one more time because I thought it was brilliant today. Rob said, when I follow the rules, it's almost like cheating. Guys, Nexgen spent 27 years teaching people to day trade. Every pattern that I teach in this room has been proven time and time again. Every pattern that I teach in this room is a part of my own trading plan. There's a reason for that. Because it's easy and I'm just not that smart. So fill out your spreadsheet, guys. Write that plan down. And commit to following it. Rules met. Andy says, I think this is in my head while driving. I want some of my money today instead of give me all the money. I think that's in your head now. And it's so much easier not chasing losses, but taking out a little, right? It's so much easier to feel confident in everything that you do instead of hoping that sideways trade works. Trading doesn't have to be difficult. Guys, my triggers don't match and I'm directly into an area. I don't have any rules met. So I'm going to go take 5 minutes. I am going to mute the room. If you have questions, post them. If you have pictures, post them. When I come back to the room, we're going to look at everything you guys posted. Hopefully you told me what you're doing. And we're going to revolve it around momentum, a clear path, and an entry area. So guys, I will see you in about 5 minutes. Go stretch your legs. You can't stare at the market all day long. It'll drive you nuts. D, you need high probability trend trade entries? For sure. We'll go back over that when I get back. I'll be back in a minute. Can you show me a couple pictures that you've taken? And that'll let me know where your head's at, and it'll make it easier for me to bend your brain to my will. To clear it up. Once I know how you're thinking, I'll know exactly how to fix whatever needs fixing. So I'll be back in just a minute, guys. And just a heads up, if you instant message me during class, I don't always look and get it, so don't get your feelings hurt, please. All right, guys, let's get back into it. All right, D, I am going to click on a few of your pictures and let's see what you're doing and what we can do for you. So what you're saying, and correct me if I'm wrong, D, that when the large chart has momentum, when the large chart, in this case, is a 50-50, right? You're looking for a pullback to areas inside of triggers. Let's see what the next one looks like. Small triggers, large triggers, let me see, strong top. Smalls are below the large, odds favorable. I do like that. Small and large triggers are below resistance. No, not really. So let's look at this real quick. 83.86, 83.86. So where you circled that one is right here. Do you see that? The small triggers are above the divergence low. The small triggers have barely made it through support. The large triggers are above 84. The large triggers are still above 86. And the large triggers are above here. So the path is very much not clear. And you can even see it because this is the fib that it hasn't cleared. Does that make sense? It's okay. But let's celebrate a little victory, right? You took a pullback to resistance inside of favorable large triggers. So D, you're 2 for 2 on your entries so far. Strong top, odds favorable, it's a 50-50, and you take a pullback right to resistance. It's not quite inside of the triggers. And it works out great. 3 for 3, D. So let me ask. Stop placement, 4 or 5 ticks above the triggers. Stop placement, 4 or 5 ticks above the triggers. Stop placement, 4 or 5 ticks above the triggers, right? So 3 times in a row, you've taken the advantage of momentum and pinpointed an entry. This one had the potential to break. This one was right into termination conditions, but momentum and a great entry still produces results. And this was another one of those potential to break, and a great entry still produces results. D, I hate to break it to you, but it turns out that you're pretty good at this stuff. So what do you think is, so what's jumbled in your head regarding entries? Because it looks like you're nailing it. Okay, so you're doing great. It all starts with the momentum, right? You're killing rule number 1. Momentum is your thing. Momentum you've got 100%. Can we agree? I agree. So what if, D, call me crazy, call me whatever you want. If I went and I clicked on termination conditions from the spreadsheet that I've given twice in the room, right? Whoops. Let me move the spreadsheet over here. Price reached Fibonacci support. Triggers were above. No short trades. This is a term. No clear path. Thank my lucky stars. Look at the bounce. Do you see it? And that has Big Mo, Pete. And it still fails. So D, there's a termination condition straight from the spreadsheet. And there are 31 pictures. So if you know that this is your weakness, right? If you know this is the one that you really want to work on, and we all have a thing. This is what I had to work on, D. So I definitely know how to help with this one. This is what I do every time. When I think it's time to take a trade, the first thing I say is, did price reach an area, right? So we got to the fib. The small triggers are through. The large triggers are not. Can we agree that we're 50-50 not only on this fib, but also this fib? Does that make sense? And Pete's absolutely right. Momentum gives it the potential to break. So we're 50-50. So you have to know what are your rules if you get a pullback on a 50-50. Well, did we come from a termination? We did. That's strength. Where are my areas? If I get a reversal bar, it's already dissected this one. Probably not my entry. The mid band is hovering in between correction points. Well, now it's inside of these triggers. So my window, if I don't hit that fib, is likely somewhere right here. And you're good at this one too. So the only thing I would say that maybe you need to go through is every time you're looking to take a trade, ask yourself, go through what it means to have a termination condition. And learn to say this out loud. This is what saved me. Is every time price reached an area, I started talking to myself, and I would say literally, where are my triggers? And when I started doing that, when I made that the first thing I did, D, so I'm thinking, okay, everything's going up. Look at the market go. This is pretty cool. Price reached Fibonacci resistance. The triggers haven't broke. I know that it's not high probability. Divergence from a fib, for me, says no long trades, let it break. You'll talk, and I'm telling you, talking to the dog is one of the greatest things you can do. D, another cool trick, and this is for you guys that are kind of new, but not totally new. Do you use TechSmith Capture, D, or do you use Snagit? TechSmith? Let me show you something kind of cool that you can do with TechSmith Capture. I've got mine coming up right now. So guys, I say a lot. I say, you know what? Talk to yourself, right? Talk to yourself. Scare the dog. Click Capture. And I want you to highlight your screens, right? I'm not even in a trade yet, D, but this is what I'm doing. I'm going to click on this camera, and I'm going to record my screen. And I'm going to say to myself, all right, so I have odds favorable momentum. This is great, but price reached Fibonacci resistance, and the small triggers have kind of peeked through, and the large triggers haven't made it. And I know that my rules say divergence is a killer on 50-50s, especially when it hasn't smashed through. I just don't have rules met for a trade here. And if you hit that record button every time, what happens is you're forced to speak out loud about the advantages that you have. You have to. And when you start doing that just because you're recording, eventually you don't need the recording. You still talk to yourself. I talk out loud before every trade. I talk about momentum. I talk about clear paths. Sometimes I even argue with myself. But it all goes back to the rules, and I've got my rules laid out right in front of me. So if termination conditions are your thing, your phrase every time you're thinking about a trade is, did price reach an area? Where are my triggers? So I hope that's helpful. That was my challenge, D, was trading into termination conditions. That was my biggest challenge in the beginning. And I would say if I still have a tendency to break a rule, that's the one that I break when I'm having one of those weak days. So recording, it's kind of cool. It forces you to talk yourself through it. You're welcome. Thanks for asking the question. You know, there was, I haven't told this story in a while. I'll tell it. When I was 25, met a stupid girl, fell in love, wanted to do more with my life, whatever. And I went to a trade school. I went to a mechanic school. It was a motorcycle mechanic school. Well, Rob, you have to be talking about the trade. If all you're doing is talking about the trade, eventually, Rob, you'll be able to go from talking it out for 30 seconds to talking it out in about 2. And eventually you won't even have to talk it out. You'll be like, boom, got it. But guys, I was going to this trade school, Motorcycle Mechanics Institute, Phoenix, Arizona. And I wanted to be a motorcycle mechanic, and I knew jack squat about mechanics. So what I did is I go to the school, and I'm going to learn because I love motorcycles. And they make you take a theory class. And the theory class talks about basic combustion engines, stuff like that, things I knew nothing about. And the teacher is up at the front of the room, and he's talking about camshafts. And some of you know what they are, and some of you don't. I had no idea. But this guy was talking about camshafts like the whole class knew what he was talking about. This guy was talking about camshafts like everybody in the room had been born with a camshaft in their mouth. And I'm in front of about 60 people. It's a pretty big class. And these trade schools, guys, they are filled with ex-convicts, and they're filled with Army Rangers that are out and looking for something to do. And they're filled with meth heads, and they're filled with Hell's Angels, and all these people that really are a little terrifying. And I raised my hand in front of 60 people, and I said, hey, what's a camshaft? And the class laughed. And a lot of the guys laughed. Like, oh, he doesn't know what a camshaft is. And in my head, I'm thinking, well, no shit, that's why I'm in school. And guys, you got to have that no shit, this is why I'm in school mentality. If there's anything that I ever say that doesn't make sense, you have to ask. The same way Dee's like, hey, Mark, I need just a little bit of help. Guys, we will stop the class and find a solution. There are no silly questions, and I promise you, there's at least 3 or 4 other people in the room that are going to start recording and talking to themselves because Dee had the courage to say, hey, Mark, I'm just not there. How do I fix it? So I wanted to throw that out there. And now I'm going to scroll to the top of the chart, and we're going to start clicking on stuff, guys, and we're going to see what's been going on in the wonderful world of the market. And then Ron says, just simming around in the news. Ron doesn't want to trade news. He knows better, but he'll fire up Simulator and have some fun. And sure enough, when everything says up and it's going strong, he hops in, hops out. Simulated retirement lawyers, right? But even in the news, the patterns work, right? Even when news hits, guys, the patterns work. That trend trade short right into the news was a huge winner. I went and talked to my wife and forgot to cancel my trade. And sure enough, right to Fibonacci support. The patterns work, guys. News just makes them too fast to work sometimes. And then Pete, that same one that we just looked at, Pete said, hey, Mark, check it out. With odds favorable momentum and a clear path, it turns out that price pulls right back to support inside of favorable large triggers. And man, Pete said in the room, big momentum. Big Mo. I love that because I picture like a big hairy dude with a greasy haircut. Big Mo, momentum, guys. Momentum breaks areas. Momentum pushes a market. Momentum does everything wonderful for new users. And when you can find your entry, that momentum carries it. And man, 3 different opportunities. Only 2 if you didn't take it because of 3 divergences. But at least 2 opportunities to make an awful lot of money there. And that was this morning. It was around 4 in the morning. And Pete, what are you... Oh, you were asleep. I was like, what were you doing up? But that's it, guys. It's just a pattern, and the pattern repeats itself over and over and over. Whoop, that's Facebook. I try not to go to the Facebook ones too much. And then Erla, you're killing me. These get smaller every time you post them. So let's see what we have. Everything says up, every trigger is up, and you're saying to yourself, you know what? I believe this has the potential to break. So let's see what your small chart looked like. You said, let me get above the support. Let me make sure everything is green. And I don't totally understand your entry. It looks like a late entry on a trend trade. And you just ride momentum up the whole freaking way. Is there an exit up there? Mid-band not to hold, you got out. You gave a little bit back, but that's a beautiful trade, Erla. Nicely done. And then Josh. Odds favorable momentum. Clear path. Entered at mid-band, stopped out. What went wrong? So, Josh, yesterday you dropped one in the room and you split before the explanation. Two things. That's okay. I meant to send you the explanation because I actually annotated your chart and went through. So I'm going to go back and find it real quick in my editor here. But there are two things on the NASDAQ. I take so many stinking pictures. Let me see if I can find it. And you're trading a 13.2, right? Well, hell, let's just make a new one. So on the 13.2, Josh, just different. Just different. What's better, blonde or a redhead? I don't know. They both smell nice, right? So they're just different. So Josh, on the 13.2, you had every rule met perfectly, right? Every rule that you could possibly want met perfect. But there's one thing that you didn't take into account. And this is the exact same challenge that you had yesterday. 100%. So we have found your thing and I can fix it, Josh. Your small chart on the NASDAQ, brother, your small chart on the NASDAQ is the large chart on any other market. And you've got to realize this. So if I go to crude oil right now and my small triggers are coming down with this velocity on my large chart. Let's see. Let's go look at crude real quick. See if we can find it. Are you going short against that right here? Hell no. So this chart, Josh, is your entry chart. So on the NASDAQ, there is a level of respect that you have to give those small triggers that you don't have to give to a 5-1. And what that means, let's go to the spreadsheet. What that means for you. Let me find it real quick. And I'm telling you, Josh, this fixed me instantly. So the large chart rules don't change. Large chart was freaking amazing, right? And that's important. It's important that the rules are met on the large chart. But two things that I watch on the NASDAQ entry. When I get to the area, where are those small triggers? Where are those small triggers that can ruin my good time? So Josh, if they are below the reversal bar marker, I wait for a close on the correct side of the triggers. If they are above the reversal bar marker, I will enter at the area. And I'm telling you, I blew out a lot of accounts figuring this out for you. If I get to the area and the small triggers are less than a full bar away, I wait for a close on the correct side. If I get to the area and they're above the reversal bar marker, I'm in at the area. This is for the 13.2. If I'm in it, and guys, all of this is in the spreadsheet. If price reaches the area for entry and the small triggers are less than a full bar away, I wait for a close on the correct side. If I get to the area, the mid-band inside of favorable large triggers, and the small triggers are a full bar away above the reversal bar marker, I will enter at the area. Because what it does is those small triggers, guys, these small triggers, you'll see bounces off of them all day long, and they act as resistance. They act as support. Yeah, let me see if I can find the link. So the cool thing is, Josh, is the second these are below the reversal bar marker and you're here, if you don't get a close on the right side, there's just no trade. It keeps you out of it because this momentum is screaming, right? Look at this just to the left, and I think this is what you'll dig. As long as price doesn't close on the wrong side of those triggers, it continues moving up. Do you see that? The second it closes on the wrong side, that's where the push down. Is there any reason to believe that it's going to be any different going this way? Pretty cool, right? That's how you beat the NASDAQ, or at least have a fighting chance in the NASDAQ, is you've got to respect those small triggers when it's the 13-2. And Josh, what's cool is go back and look at the ones that you've lost. Of course, here's the other one too. Go back and look at the ones that you've lost on the NASDAQ and where were the triggers. And then if you come through and check this out. So here is, if I get down here to the area and those large triggers are way up here, I'm in at the area. 100%. I'm in at the area because even if those triggers act as resistance or support, let's see what this one looks like. I've got so much room to get back. And this was someone in class that waited for the close when they weren't a full bar away. You could have been in here with 2 ticks of risk. And if these are going to act as resistance, hell, you've probably already been paid. So I hope that makes sense. And if you're a NASDAQ trader and you find yourself getting run over every day, there's a good chance that you're fighting those small triggers. Go back and take a look. But Josh, what I had to do, and I hate to make it sound like what I teach works, is I had to start taking every trade that I took in the NASDAQ and going back, and I had to study those trades and look for the common theme. I had to go back and figure out, what the hell? Why do I keep getting run over? And that's what I found. So I'm happy to share it. You're welcome. I love doing this stuff, guys. There's a lesson for everybody. All right, Jeffrey Dean, right? Odds favorable momentum. Hell yeah, all day long. And you just jump in. And then you stop out for a couple ticks. And then you just jump in. So, awesome. Jeffrey, can I just ask, why are all of your targets below the fib? You know right where the market may stop, right? Don't be afraid to get paid at one. Let the other run if it's cranking. But don't be afraid to get paid, especially if you're in those prop firms, because if this fib holds and it bounces up here, it's going to ruin your day. I like it. You're on the momentum side of everything. Momentum for the win. And management's the second part. So, Jeffrey, let's do this too. I love this. Guys, I don't know, today just feels good. If I were in a short trade, right? That's about your trade right here. Wouldn't it be awesome to get paid at the fib instead of hoping the fib holds and getting stopped out way up here? Or if I were in a long trade, wouldn't it be amazing getting paid at the fib instead of hoping the fib breaks and getting stopped out way down here? The same is true here. The same is true here and here. And guys, I told you, you're going to understand where the market is likely to go. But you're going to have this fear that it's going to go without you, that it's going to keep going. And there's this little devil that sits on your shoulders. I'm going to tell you guys right now, that little devil is a colossal pain in the ass because he is the what-if monster. Jeffrey, don't take an exit at blue fibs because what if that blue fib breaks? right? Jeffrey, don't take an exit at that pink line, because what if that pink line breaks? And that's gonna affect your management plan. One of the reasons why it's so important to have a solid plan. The other thing is, hey, I know your rules aren't met, but what if it breaks, right? Or people jump out too soon. I know that there's no reason to jump out, but what if it arbitrarily turns from the middle of nowhere? Jeffrey, protect yourself. Make 2 ticks for absolutely no reason, only to jump right back in, right? How kick-ass would this have been if you just stayed in it all the way down? And how did you know that you could? Because price is on the boogie side, right? Price is on the good side of those triggers. Until you get a reversal bar against it, this market's going down, brother. No reason to jump out. And if you were in at 42 and you exited at 12, that's $300 worth of profit on a 2 lot. Jeffrey, that's a $600 trade with the best momentum. Shut down, go play golf, right? Goals met. Great job, dude. I love it. You're cranking on that momentum, and I'm telling you guys, momentum fixes things. Momentum makes life easy. Momentum is the basis for everything wonderful. Momentum owns a chocolate factory, and everything is edible. It's magical. The hell is a fairly strong top, Morgan? Is this Morgan? You have to wait for them to collide, Morgan, and then you hear them, and then you know exactly what they are. Andy Man, what's a fairly strong top? You created this term. How do you define a fairly strong top? Because I define a strong top as no triggers breaking through. Okay, so check this out. Are you ready? Guys, this is why annotation is key. Because what Andy just did here, and Andy, I do hope that you're cool with this. I'm not knocking at all. Yeah, Jeffrey's like, X was legal in the 80s. It was awesome. Some of you laugh and some of you don't get the joke. It was. And it was clean. Allegedly. All right, so Andy, check it out. The way I teach strong tops and bottoms every day, yeah, I do too, is a no triggers through termination condition that reverses the market, right? Guys, remember when I told you that you would begin to trade in half-truths if you didn't completely understand a concept? Andy said it didn't reach a fib. But Andy, it reached a divergence high. None of the triggers broke, and it reversed the market. It fits the recipe 100%. Does that make sense? And guys, this is why I say every day, don't create a pecking order. It's lines on a large chart. That's all it is, lines on a large chart. So Andy, you had a rock star strong top. You had awesome momentum, and you took that quick little snap back to resistance and got out with a loss of momentum. Great job. But this is just a language thing, and it creates an awesome recipe for everybody, right? This was a strong top. And this never became a strong bottom, but that was a strong bottom, and it went right to a strong top, and then everything cranked down. So once you remove the word fairly, it increases the confidence on this trade, right? And I've never, ever in my life mentioned fairly strong or kind of strong or a little strong or strong. Man, it either is or it isn't, right? It's either chock full of kickassery or it's not. And when you start taking the little self-imposed rules out of it and keep it very, very black and white, you stop talking yourself out of the things. All right, Jen. Term, no triggers through. Good top triggers roll. I swear Jen is in my head. She's like, Mark's going to talk about this. Let me go back and create a picture. Odds favorable momentum. Momentum trade 1. Price clears, fibs, triggers, and then you're out at the fib. Trade 2, there's the pull pack. Right on. I don't have a trade 1. Jen does. She says let it clear. This was Jeffrey. Same concept, right? Same spot. You guys are in cahoots. And then she takes Andy. She takes your trade and gets out at the fib. Jen, beautiful trading. And it all starts with a good top. It all starts with that strong top. I do love a strong top. Also a fan of a strong bottom. All right, Mr. Morgan. No triggers through, good bottom, amen. Odds favorable, heck yeah. Not a clear path, not even a little bit. So you take the perfect entry and get out just before trouble, and you catch a couple ticks on the second run. Beautiful, Morgan. So you made what? You were in it at 45, you're out at 67, 120. $140 on a trade that failed. $140 on a trade that fails. That puts you around the 36 grand a year extra income. 380. Were you trading extra contracts? I can't see the contract count. Was it a 2-lot? Oh no, it was a 4-lot. Hell yeah, even better. 380 on a trade that fails because of awareness that there was a problem and a willingness to manage. You think like a Jen sometimes? I've learned to fear the Jens, Jeffrey. And Jen, thank you for that. And Andy said it earlier. Guys, I'm only as good as my students. You don't? Well, it's because she's your sister, not your wife. But, guys, I want you to let that resonate. $380 worth of profit on a trade that failed. And Morgan, I don't think you could have done this any better or intelligently. I think everything about this is beautiful. And a willingness to not make every trade a home run is when it starts to get easier, guys. Just really heads up trading there. I love celebrating victories. Andy, odds favorable, clear path. Andy says, you know what? When everything is going up and I'm on the left side of the triggers, I will hold that mofo until it comes to the other side. Andy. I love it. That was your 3 seconds you were talking about earlier? Do you guys see it? He's in on the momentum phase, and he gets one off at trouble. And he takes the second one off with a reversal bar on the wrong side of momentum. Andy, you have absolutely just rock starred this look. And it's coupled with momentum here. If you're going to jump into a trade, ladies and gentlemen, that's how you manage it. Andy, beautiful. That's all right. Eventually that won't be sim, right? But you already made your money. Why not keep practicing? I love it. And then D, we're going to go past yours and we'll go to Andy again. Dun, 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 dun. Odds favorable. Clear path. Pull back to resistance inside of triggers. Out down here. Bought at the reversal bar marker. So why did you get in at the reversal bar marker, Andy? Very nice. Was it because your triggers were split and you wanted confirmation of the trade? Okay, but why did you require confirmation? Because, okay, but why? Was it, okay, so NASDAQ doesn't always need confirmation, Andy. And here we go again. And guys, NASDAQ's a different animal. So, Andy, you're on a 10-2, right? So let me walk you through my NASDAQ entry on a 10-2. We walked Josh through the other one. There's no divergence over here. So no divergence, go with the area. Divergence, wait for reversal bar. That's the 10-2, right? But Andy, that you had something else going on here. You had one correction point all the way up here, and you had one correction point all the way down here. Which one is it going to go to? Is it going to go to the mid band, or is it going to come all the way up to the 1-to-1s? Because the reality is that your stop, and the only intelligent stop, is all the way up here from this entry. Does that make sense? And that is a metric crapload of risk. So you can say, let's get that reversal bar, and now your risk is established, right? So if it decides to change direction and go up, you're not floating through $1,000 worth of loss. You're taking quick, smaller, manageable losses. Does that make sense? But in regards to confirmation, if these triggers were favorable, dude, we're in at the area without divergence. So it's kind of a combination of two lessons there. That's okay, though. Because I don't have any pressure of taking a trade, Andy. All I'm doing is I'm looking at a chart that's not moving. And then once you get divergence from a fib, once it reaches that termination, no more short trades until it breaks. Beautiful trading, dude. You're crushing it today. You've been crushing it all week, though. Your groove is there. And I don't know if you believed me when I told you. It's coming. It's coming. Andy, you are a different trader today than you were even a month ago. All right, termination, triggers roll. Jen, the 2004 trade, right? You've put this one back in? Wait and you can win. Amen. Jen, remember when we first met and you loved this trade? And then you stopped taking it while you sorted things out? And now it's finding its way back in? Can I give your secret away? And guys, I love this because I don't forget things. When Jen came to me, and Jen's brilliant. You guys don't know this. Jen's smarter than the average bear. There's no doubt in my mind. I've never met her, but you can tell from talking to her. Brilliant lady. Jen looked for every move because she felt like every penny in the market had to be hers. And she overtraded. And Jen, can we agree it created a lot of challenges in the beginning because you were trying to catch every move rather than the best moves. So what Jen did is Jen said, you know what, this isn't working for me. Maybe this Novak Yahoo is onto something. Let me simplify. Let me go back and keep it as basic as he teaches it. And then what happens is she begins catching trades. And Jen, while you were catching the best trades, you kept seeing this thing happen, right? You kept seeing this happen when you were waiting for trades up here. And eventually this one found its way back into your plan because you're like, wait a minute, this is a pattern that repeats itself. Once these roll from a strong bottom, Jen, that is the trade that we started teaching in 2004. But if you don't understand terminations, if you can't find the patience to wait for triggers to roll, then you get in here because of the termination and get stopped out, right? And you get in here and you lose and then eventually patience. So Jen, you have just 100% embraced the path. And you did exactly what every human does. Try to find it all, realize it isn't working, simplify, and now you're dripping in success. And I absolutely love that because, guys, I do believe in the plan wholeheartedly, but I have fought it tooth and nail. I've made more mistakes in my life than you guys are going to make in the next year. And I've learned from every one of them, and I bring every one of those mistakes to this room and try to help you guys avoid them. But you have to make your own. You have to go through that process. You have to believe that momentum is amazing, and you have to believe, Ron, that the backside, when it clears it, you weren't. You were just new. And there's such a big difference, right? I've never played cricket. I bet you I would be shit at cricket. But if you gave me a year, if you gave me 6 months to learn the rules and how to do it, I bet you I could be pretty good at cricket. You should have seen my first tattoos, Jen. They were horrible. Odds favorable, clear path. Odds favorable, clear path. 6 contracts, $680. One trade. One trade. Just more contracts. Ron, thank you for showing this. Guys, you don't have to be busy to be successful. You have to be picky. Great trade. Momentum for the win. Big Mo, as Pete would call it. Big Mo. All right, Jen, what'd you do here? Termination, no triggers through. Divergence, not my trade. Amen. And just for grins, guys, let's go see what happened off that divergence from the fib. That would have been a loser. Nice job, Jen. Rules for the win. It's like cheating, right, Rob? It's like cheating. Mighty Mo. Man, I'll tell you what, Big Mo's going to be a thing. I've got to go find a picture. I'm going to draw a Big Mo. All right, large triggers down. I like it. Red background. I like it. 5-1 has down triggers below the reversal bar marker. So Rob, right now, you're trying... Let's go through it simple. I'm gonna get in your head for a second, I think. I love that, Andy. It's John Novak Day. So Rob, do you have odds favorable momentum? Absolutely, right? Smalls below the large, larger down. That's pretty awesome. And you also recognize that the large triggers weren't a full bar away. That doesn't create a trade. That just means that price may not close the gap back to it. Do you have a clear path? You can give me a Y or an N. Because you don't mention the clear path here. You went from momentum to reversal bar markers. You created a rule that isn't a rule. So you do have momentum, but you don't have a clear path. And then Rob, one trigger is green and one is red. And you just don't have a setup here yet. You don't have an area inside of favorable large triggers. If you keep it just on the 3, you don't have the rules met yet. There's no missing on the read. What you did is you added to the read. And that's totally normal. Every time you learn a new concept, you're going to try to make it a part of your rules. Your rules are momentum, clear path, and an entry area, right? This should be the 3 things that you write on every chart, ladies and gentlemen. Is as you're learning the high probability trend trade, 3 things. You have momentum. You don't have a clear path. You do not have an area inside of favorable large triggers. Rob, are you missing anything on that read? Is there a trade that's setting up that you don't see? Not at all, brother. So what happens, Rob, if these small triggers keep pushing, the large triggers get below, and you still have momentum, right? By then, these triggers turn red, and you'll probably have areas inside of them. So you're waiting. But one of the challenges is this 50-50, when this isn't from a termination condition, it's less likely to break this fib and more likely to bounce up. So great read, dude. You were there. Don't worry about the reversal bar markers right now. The only time you need to ever put that into it is if price reaches the mid band and the triggers are a full bar away. Then the mid band's a termination. But don't forget about that fib right there. I think it's a great read. I think you were in the it's about to set up stage, but it hasn't set up yet stage. Pete bounce trade. The PBT. Guys, this big fat fib is from a 21.3. It's a higher time frame. I love it. Pete, are you catching them on the way down now? I thought you were catching them on the way up. I love that. Starts to go down. Guys, that's what you call faith in fibs. It fights momentum. It fights direction. It fights everything. But when you have time reading the indicators, you're going to begin to recognize patterns. Ron has a similar trade. And it's not a home run, and it's not a big winner. But the reality is it's 42 to 28. It's 140 per contract. That's over $1,000 in that trade. Because Pete has the confidence based on his experience reading the indicators. I hate this trade, Pete. For me, it scares the hell out of me. Heartburn. I have a roll of Tums on my desk because of you and Ron. But you know what? It doesn't faze me in the least bit for you because I know that you've done the study and you've proven that it provides you an advantage. I just can't bring myself to do it. It's like the high dive and your fear of heights. You know that you might live, but oh man, you're dizzy. I love seeing you guys find other ways to make the money. But if you try to do what Pete does on this fib, then you don't understand the plan, right? If you try to do it off these 1-to-1s, you don't understand the plan. If you try to do it off of this fib, you don't understand the plan, or this fib. And it's kind of cool. I have not jumped out of a plane, Jen. I would. I'm not afraid to. My spine surgeon said don't. Apparently, there's a lot of forces from jumping out of a plane that are not good for fused spines. But I would love to. I have rappelled out of a helicopter. That was a lot of fun. All right, Steve Diego. Strong top off the divergence termination. Amen. Strong triggers. Heck yeah. Clear path. We are as close as we can be. There's all the giddy up. Snap back to the fib. You were looking for the mid band. Oh, I love that you put that. Steve, what's your area inside of favorable large triggers? Let's just keep it so basic by the rules. What is the one line inside of favorable large triggers, ladies and gentlemen? Does anybody see it? No, Steve Diego, that midband's on the wrong side of the triggers. What about this fib right here? Buried inside of those triggers. How do you feel about that? By the time divergence prints, you're already 3 bars down. Yeah, that's okay. But Steve, you know that momentum trade you're looking for? This is like the byproduct of when that momentum trade and a trend trade have an illegitimate love child, because it is the snapback to the fib, but it's also the snapback to the fib inside of favorable large triggers with a beautiful large chart. You circled your entry. Perfect. Thought it was a good entry. Trigger separated and large, strong down, but thought I needed to wait for entry at the mid band. Okay, I will comment. And, oh man, I love this. Guys, I'm so wound up today. Here comes your English Lit major embracing language again, Steve. It says areas in the rules, right? Fibs, midbands, yellow 1-to-1s. It doesn't say anywhere in the rules trade a midband. And for whatever reason, people gravitate to the mid-band. I don't know why. I don't know what it is about a mid-band that gets people excited. And this is one of the reasons why we say areas. Areas inside of favorable large triggers. You'll never hear me say mid-bands inside of favorable large triggers. I always give you the list. Fibs, mid-bands, or yellow 1-to-1s. I do know what color magenta is. And when we talk about termination conditions, we talk about lines on a large chart for a bounce, lines on the small chart for an entry. So, and this is one of those things where, no, it's not bad. This is an awesome freaking lesson. Because, Steve, what you did is you did what so many other people do. And why I think it's so important to get in the habit of typing on your charts. Pull back to an area inside of favorable large triggers. And Steve, this isn't necessarily directed at you. This is an opportunity for the whole class. So do you remember when we talked about entries and we said price typically pulls back to the large triggers, price typically pulls back to the large triggers, right? This is my correction point. This is where I expect the price bars to come to. Is everybody good with that? And then once I have that correction point, I anticipate it bouncing off of an area inside of the correction point. This is how we pinpoint our entries with such accuracy. And this is why I like the phrase correction point so much, because this is on the wrong side of the correction point. And once I'm beyond that correction point, which line is going to stop the market? Does that make sense? Once I'm on the wrong side of those triggers, it's just a guess at that point. It's just a guess, which is why we put these areas inside. And I'm telling you that, Steve, once again, I've been stopped out at this mid-band 1,000 times and then stopped out here. This was my trading plan for a while. Everything says down. I'm going to get in at the mid-band. And it runs me over. I'm like, uh-oh, I guess I was supposed to get in here. And it runs me over. Well, maybe that was it. And it runs me over. Okay, it's got to go down here. And by the time I get up here, it's like odds favorable against me, but I'm so married to that short and I don't have a correction point. And I don't know if I'm the only person that's ever done that, but it sucks to get stopped out 8 times on the wrong side of the triggers. But I think correction points is a powerful phrase, and it took me 3 years to come up with it, Steve. Price returns to triggers. It's why the gap theory works. Price returns to triggers. It's why the entries are so precise. And then once you believe it, oh, dude, have fun, Morgan. Watch out for bears. But guys, this is another one of those instances where annotation, right? You get a little bit of feedback, and Steve's not going to miss that trade next time. He's going to be all over it, 100%, because he had to listen to me flap my gums a little bit about it. All right, Kenan. Strong triggers. It wasn't a no triggers termination. Odds favorable? Absolutely. And you take the momentum style entry, small triggers break, snap back, and you got out of trouble. And you're still trading 1,000 contracts. But, Kenan, trading from the area, not into the area. Brilliant. Great job, dude. You could do that all day long. And then just get paid at a fib, right? From 28 to 38 is $100. You're trading 10 bajillion contracts. You just bought a yacht with that one trade and all those contracts. And you didn't have to hope that the area broke. And you were still in the momentum phase, and life was pretty easy. Nicely done, dude. That is textbook. Textbook. So take that picture. Trading from the area after the small triggers break, not into the area. That's the big difference. Yesterday you got in here and it bounced against you. Today you took that lesson and made it easy. So, rockstar, dude. That's why you have to post losers. That's why you have to post challenges. Because you don't want to hear me talk about this stuff again. Sick of hearing Mark talk about this. I'm just going to do it right so he doesn't. Andy, that link doesn't appear to have anything attached to it. Let me try again. Maybe it's me. My TechSmith is slowing down on me. Let's see if Miss Clara's comes in. Oh, Clara paid her bill. Oh, just the Fibonacci. Okay. I got you. I'm like, where's the trade? Got it. Thanks, man. All right, Miss Clara. Rule 1 met. Strong triggers. Oh, that's okay. Sometimes I click and I automatically look for trades. Rule 1 met. Strong triggers. Was 50-50 when you entered. No, I got no flow, Andy. You took the pullback, few ticks below resistance, maybe a little early, and then you got out with a loss of momentum. 07, 02. So it's $50 in your pocket. It's not so bad. It fits the rules though, doesn't it? 100%. And then Clara, you'll get to a point. So from 07, you only had to make it to 97 for a $100 trade. And that was right here. So I know that you're on one contract, and I don't know if you're trading live or simulator. But this is one of the reasons why 2 contracts is so effective in the beginning, guys. Because you get paid on one, and then your entry learning turns into management learning. And if you only have one contract in the fight, then you never get to let it run, right? Practice getting paid and then managing your second contract. That was your first live trade, so you got nervous? No worries. Well, you made $50 on your first live trade. Congratulations. It's a totally different game, isn't it, from Sim? You got to know your rules. You got to know why. Great job. Congratulations. I love it. All right, Ollie, your links are spinning there. And I don't know if it's your TechSmith or the room. But I can't grab hold of what you're posting. Do you want to try and post them one more time? Let's see if we can get them. I literally have like the little spinny doom thing going next to it. There we go. I love it. Trading at night, finding advantages. So you made $480 from 2 trades. Gap theory, yeah, it is. Oh, let me blow this up and get all of it. Let me start large chart. Bad top, all the way to support in the mid band. You get your little stranded sellers that you absolutely love, and you take that confirmation. First target hit, and you get stopped out with a small profit. And then when it comes back to the HVA at the support with the gap theory, you get another signal with the HVA and ride that thing up. Dude, Ollie, this is everything that you were talking about yesterday. Does that gap theory help a little bit? Create a little confidence on taking it? I tell you, I don't know if you can hear me smiling, but when we work in this room and we have these conversations and you guys come back and you're just crushing it based on it, right? Those little things that you don't see, and just because I've been doing this so long, I see them. Man, Ollie, great job, dude. That's how you take advantage of the gap theory. And it's logical. You have reasons. Love it. Nicely done. Nicely done. All right, Josh, if you fought small triggers, I'm coming through the monitor at you. Odds favorable. Little triggers are above the reversal bar marker. You take it at the area, and you get out at the potential trouble. Once again, taking the lesson. Thank goodness, because your avatar, your profile picture suggests that I don't want to come through the monitor at you. Doesn't that take some of the stress out? Having that little bit there? Which chart, Doug? Which one do you consider the third? Good, Josh. Don't tell your dad. Keep that from him. The range chart, Doug, it's a confirmation chart. That's all it is. It's just a confirmation chart. When your rules are met, you can use it to look for a signal. If you're not 100% solid on your rules, it'll get you in a lot of trouble. We have a bet. First person to $1 million on Apex has to buy the other person a classic car at Barrett. All right. You know what I would say, Josh, and this is just me, first person to $1 million needs to buy Mark Novak a classic car at the Barrett Jackson. I'm partial to old Cadillacs, and I do love muscle cars, so just saying. That's awesome, dude. You guys will get there too. I have no doubts. Fair enough. I'll come out. I'll drive it. I always joke that one day someone's going to buy Nexgen Island and we're going to sit around and drink pina coladas. All right. So Doug, there's a section in here on market flow volume analysis. That would be awesome. No, 49 Mercury. When I'm finally old enough to have a hot rod. I just don't need one right now. I don't have time to enjoy it. But a 49 Mercury, chop top, flames out the back, everything. That's my dream car. So Doug, market flow signals when your rules are met. And this is why I call it a confirmation chart. So it depends a lot about what you're looking for and what kind of trade you're looking for. So I can't just sum it up in one word. So let me show you on Ollie's how he used it as confirmation. So what he did is first his rules were met on the large chart. He had weak triggers, divergence, and he reached a mid-band and fibs. So the first thing he did, Doug, is he verified that price had the potential to come back to the large triggers. Does that make sense? That's the first thing. He's not looking at this chart at all. So the first thing he has to have is a potential trade setup. He goes, okay, with the right confirmation, this is a potential long to get back to those triggers. He has support, so he has an entry area on a smaller, faster chart, a place where he can get in and have support and something to put the trade behind. Notice it's not a trend trade, right? And then on this chart, he has support, he has a mid band, he has all the triggers above, and then this bar right here, that pink dot on an antenna bar says that the sellers tried to push down, but they couldn't do it. It reversed it and went in an up bar. This is a market flow signal. So what he did is he said, hey, I think this area might hold because of the gap theory. It lines up with an area where I can take an entry here. If my range chart gives me a confirmation bar right at that area, well, then I'll enter this trade and I'll try to close the gap. Does that make sense? So the confirmation comes of the rules being met. And do you need a market flow chart? You don't. I almost never use it. I use it when I'm taking trades right at great termination conditions. And there's a lot of material on the website. But if I'm using it, do you see how that's odds favorable momentum? This is the first way I tell people to use it. Do you recognize the odds favorable momentum? Hell yeah, you do. So if I have it here, I have it here, and I have it here, and I'm looking to take a trend trade, that gives me some warm fuzzies. That's like, oh my gosh. Every chart that I have has odds favorable momentum. I mean, this is a market that's likely to continue up. So I use it first as a momentum confirmation. The second way a lot of people will use it is, let's say I'm looking for a high probability trend trade right here, right? And I look at my range chart and it has odds favorable, and it has a high volume area, and it lines up with areas inside of favorable large triggers, and I've got the momentum here. It's, once again, it's a confirmation tool. It's nothing more than a trend trade, but it's one more level of, yeah, this trade's got a good shot. So what I encourage people to do is, Doug, when you take a trend trade, if you want to learn the market flow, circle your trend trade and just look and see what it looked like over there. And feel free to drop it in the room and say, Mark, I took this trend trade and this is what it looked like on the range chart. Is there any information here that may be helpful? And it goes through here and it talks about bar structure and what constitutes an entry signal. And then it has the best picture for market flow. Where is it at? Sorry if I'm giving you guys a seizure here. Don't stare at it. When John gave me the market flow the first time, Doug, I took like 173 trades that day because I took every reversal bar. Thank goodness it was sim. Don't worry about what the dots are doing. Don't worry about anything. Initially, use it to confirm momentum. And it'll gradually work its way into a plan. But just like any other plan, you've got to find the things that repeat themselves. You've got to find the things that happen more often than not. And of course, any trade you guys post in this room, any chart you guys post in this room, I'm glad to read it. And I'm glad to give you everything that I have in my database to help you understand what it is you're seeing. I love this. Not a strong top, directly to support, back to it with weak triggers, and down it goes. You guys want to see something cool? It was, Ollie. I'm going to do something here. When we talk about patterns that repeat themselves, this is the kind of stuff that kind of floors me. Because the longer you spend with the software, the more you see this. I want you guys to look at this picture, and this is out of the user guide. And this happened on the S&P in 2021. Those are two very different size pictures. Price reached resistance, and it pushed all the way back to support, and then it had weak triggers at resistance, and the market turned. In with momentum, retest, reverse. Guys, these are two different markets, almost 4 years apart, producing virtually the same pattern. This is one of the reasons that I say all the time, all we're doing is we're trading patterns. We're trading patterns that repeat themselves, patterns that happen every day on every market. I don't care if you're a crude oil trader. I don't care if you're an S&P trader. But if I reach support and my triggers haven't broken, guys, I don't have a short trade yet. I don't have my rules met. So we've got about 45 minutes, guys. I'm going to walk away for about 5 minutes. When I come back, you guys are running the class. You're going to tell me what we're talking about. And if you don't tell me, there's going to be a very awkward silence. So I'll see you guys in about 5 minutes. All right, guys. Here we go. Last half hour on a Friday. Yeah, Ollie, it's gone. It's not in the templates anymore. Um, John Novak made that decision. So I don't know. And then Kenan, when you say, is there a discussion? Ron, two divergences, right side of everything, quick profits. You and Pete are going to send me to the cardiologist. Without a doubt. One thing, Kenan, I'm not a prop firm. But if you go to their websites, I'm not a long-haired person anymore. If you go to their websites, they'll talk about it. But the basic synopsis, Kenan, is... No, Ron, I lost it. I got rid of it. I am no longer a hippie. Man, I've wanted to cut that stuff forever. Deep down, everyone is, yeah, I'm a hippie. I just don't look like it. No, I've wanted to cut it for the last year. And I thought my wife wanted me to grow it out. And she thought I wanted to grow it out. So talk to your spouses, guys. You could get a haircut earlier. So, Kenan, trading firms, funded accounts. Essentially, you pay somebody 50, 100, 150, depending on the size of the account. And then you have to pass a test. You have to make a certain amount of money and not lose a certain amount of money. And then if you do that, they let you trade their accounts. That's really the gist of it. There's more to it than that, but that's what funded accounts are. It's passing a test, proving you're consistent, not blowing out accounts, and then you're there. So you're good. Awesome. Nexgen is going to have one too. So I'm not going to push other funding accounts because we're close. And then once the website's up, it'll run through the whole process. But you can go to any funding account's website. Some of them have different rules. Some of them have different conditions. They all have different pricing. Some have different platforms. But essentially what it means is... that if you're consistent, you can trade someone else's money. If you trade 28 contracts and hold for $10,000 a drawdown, though, you're probably not going to get funded. There's a lot of discussion of it over in the owner's side as well. Whoops. All right, this was Erla. These are just, it's a Keltner channel. No, they use a trailing drawdown. If you're not in the habit of getting paid and not letting it draw down against you, you're going to lose horribly in those accounts. This is just, it's a Keltner channel. So this is an outer band and this is a mid band. And you'll find very often that the outer band is an extreme. Does that make sense, Erla? I'm not sure why John chose to leave it on the range charts, but don't really need them because the large chart we're using fibs, right? The small chart we're using fibs, all that sort of stuff. This one gives you an idea with the range when the market starts to get a little exhausted going up by it. And then Steve Diego. Yellow 1-to-1, saved weak bottom. No, that's a strong bottom. Yep. Strong triggers. I'll challenge you on your odds favorable momentum. Steve Diego. Those small triggers look like they're inside of the large triggers to me. That looks like odds favorable momentum, very much. And definitely not a clear path. And divergence. And on the wrong side of the correction point. And 3 divergences. So Steve, everything's going up, right? You had no idea that was going to become a strong trend. You're on the wrong side of the correction point. You're directly in determination conditions. You don't have the most momentum. But you did trade directly into triggers, but you had the reversal bar, so you said, you know what? Maybe it'll break. I'll wait for the reversal bar, establish my risk, and see what happens. A lot of advantages missing there, though. But it worked. Make a little money, out break even. I'll take that all day long. I'll never be sad about break even after making a little money. Ron says, I'll make it this way. I'll make it that way. Tools, telephones, tutus. Are you on simulator now, Ron? Just having fun? Catching every move? I don't think I've ever seen you go both ways that quick. Just added scotch to his coffee. Just trading one lot. Right on. A lot of danger, Steve. And truth in advertising, right? And again, guys, I don't tell you whether your trades are good or bad. My job is to talk about advantages. Steve, you gave all the reasons that you were willing to take this trade. So I can't argue with your reasons, right? I'm not going to tell you how to feel. But what I will say is that when the smalls are inside of the large, it's not odds favorable. That's odds favorable. Big difference. This one says the market's likely to push. This one says anything can happen. Does that make sense? So just going back to advantages. Price reaches all of these areas. And I know from study that this is the look that typically breaks areas. This is the look where reversals happen. Because even with odds favorable, areas can stop the market. 1-to-1s can stop the market. And you traded directly into all of them with weak triggers. And then there's your correction point. And I like that you waited for the reversal bar, right? So there's both sides of the coin. There is we're coming from a strong bottom. The market's going up. I waited for confirmation. I understand that there's challenges, right? And you take the trade, and that's cool. And I don't have any problem with that. And I think that you did it really well. You managed aggressively because it wasn't perfect. And I think that is where a lot of people miss out on in the beginning. And that's why I blanket rule with, guys, have momentum, have a clear path. Because you don't know, right? It's low probability. And if you're new, what happens, Steve, and really for everybody, is that you take this short directly into all the fibs and you let so much hope overflow that you get stopped out way up here when the termination condition actually works. And if this one just rockets through, you're like, oh, well, maybe this one will hold. Maybe this one will hold. Maybe it'll hold down here. Maybe it should be here. Let me move my stops. And when you start, oh, Ollie, have a great one, man. Great trading today or yesterday. So when you start forfeiting those advantages, right? What it does is you decrease the consistency that you're capable of having. When you start convincing yourself that it's odds favorable when anything can happen. When you start thinking that weak triggers into fibs are a great thing, and ultimately this became a strong trending market. right? But we don't know that that's going to happen yet. And the same way these one-to-ones stop the forward progress instantly, even with odds favorable momentum, we convince ourselves that these one-to-ones, even with weak triggers, will somehow break. So just from a consistency standpoint, not trying to be lectury, right? Not trying to be lectury. And there's a time where I'll trade into an area, Steve. But if I'm going to trade into an area, my entry, let me see if I can find a picture of what my entry is going to look like. If I'm going to trade into one-to-ones, if I'm going to trade into a fib, if I'm going to bend my rules on if I'm going to bend my rules on whether or not I insist on a clear path, let me see if I can find an example. It's going to look like this. It is going to have no divergence. It's going to have the strongest triggers. It's going to have the tightest areas inside of favorable large triggers. Because what I'm doing is I'm at least trying to stack my deck in the other direction, right? So if there's one-to-ones and weak triggers on the large chart right here, this says that there might be enough giddy up to at least get to that first target to be able to manage it. So maybe that's helpful. Maybe it's not. I'm not advocating trading into areas, but it's okay to be a little picky if you do. It's okay to have a set of parameters that have to be met before you're willing to. Good stuff. I love pictures like this because it just creates good conversation. It creates just this whole... It's not black and white once you get into it a little bit. But the more you talk about advantages, the easier it is to know what you're getting into. And it's a good segue for this one. Because we're kind of at that point, right, where I'm chit-chatting. Whoops. I'm going to pull this off to the side. Get that up. That's not the one. Hold on. That's not the one. There it is. So I want to share this one with you, with everybody. The key to everything that we do is the foundation. The key to everything that we do is having that solid foundation so that you always know what you're getting into. So for you new users, if you're brand new and you're like, did he just tell Steve nice trade and determination conditions? Guys, I'm blanketing you very much. I am mother goosing you. I am helicopter parenting you right now. And for the brand new user that isn't reading their charts accurately yet, guys, it's conservative. All termination conditions are bad, and not having momentum is horrible. And no areas inside of favorable large triggers will steal your children and give them to aliens. You know, Josh, have a good one. Gone for 2 weeks? I hope it's a fun 2 weeks. Oh, man. Nope. Well, I appreciate that you do that for us. So have a great 2 weeks, man. We'll see you when you get back. And then, guys, just like anything, the more time you spend with it, the more you're going to see, and it opens doors. So new users don't do what experienced users do because they don't have the experience, right? And experienced users don't stick to the new user plan because they have experience. So it goes back to learn the process that yields the results. Learn how to make money before you try to make all the money. Make it easy. And then you'll find other opportunities. You really will. And then keep questioning everything. Do not take what I say for granted. Don't take it as the gospel truth if it doesn't make sense. Really question it. Well, Mark, how come, right? I love it when you guys do that. Ron, have an awesome week, dude. Got some news on Monday. Might jump in for a bit and check it out. I like it. And I will say hello to Jen for you. You're not the sharpest pencil in the drawer. Me either, Steve. And you know what's funny is people come to me all the time. So a buddy of mine, his little brother Goes, Mark, I want to learn to do what you do. And I'm like, all right, cool, I can teach you. He goes, but I don't know anything about finance. And I'm like, well, you don't have to. And he goes, well, I don't really understand what Fibonacci is. And I go, you don't need to. He goes, and I don't know anything about futures. It's like, you don't have to. And that's the beauty of this, Steve, is it caters to guys like us that maybe don't know everything, right? Maybe we don't have all the answers. But if we can recognize a simple pattern and commit to it, we can still be profitable without any of that knowledge. And that's really one of the beautiful things about what we do, is it's just patterns. Guys, everyone's like, oh, I don't understand the math behind it. I took college algebra 4 times before I got a high enough F that my teacher felt sorry for me so I could transfer to the University of Houston. 4 times, and I still didn't pass it. I don't math. Actually, I don't variable. I can math like a mofo. But the second you throw a variable in, I can't do it. But I don't have to know algebra to be good at this. I've never seen a calculus book. I don't need it. I don't need trigonometry. I don't need to know how to dissect a pig in biology. All I have to do is learn a pattern. And then once I learn that pattern, I got to commit to repeating it. And that's it. Guys, what do you want to talk about? We've got a couple minutes. Or should we call it? Should we go start day drinking? Woo! Just kidding. I do not condone. Yeah, I do. Of course, I'm one and none, but I talk a big game. What do you guys think about crude oil right now? We've got a termination that reversed the market. We have odds favorable momentum. Do I have a clear path? Someone help me with this. This is the one. Hold it. Where's D? Is D in here? D, do I have a clear path? Not yet. What do we call this look, D? D, I believe you have this. And Jeffrey, you're in it. We don't have a clear path. Large triggers haven't broken. But Jeffrey, we have momentum on both. And if you took your little hop-in thing, what's it going to take to get you out? Scared the dog. Poor puppy dog. Because momentum trades that fail typically turn into trend trades, guys. So, Jeffrey, just going to throw this out there. As long, where's my arrow? As long as price is left of these triggers and doesn't close on the other side, the market's going to continue down. Does that make sense? So some people will put a reversal bar marker or a stop right on the reversal bar marker. Clear path, amen, D. Some people will get paid at trouble. But some people will say, if I get a reversal bar, the momentum is done with my momentum trade, and I'll exit. Because if I get a reversal bar, everybody else on God's green earth has limit orders 2 ticks below resistance, hoping that it stops you out and gets me into a trend trade. Does that make sense, everybody? When your momentum trade fails, what about them, D? I don't know. What chart do you look for termination conditions? Which chart defines those areas, D? Ooh, large. That's okay. I skipped a million trades because of those one-to-ones. Do you know what I'm hopeful for, D? I'm hopeful that these nasty little one-to-ones on the 5-1 are just enough to give me a bounce up to resistance inside of favorable large triggers. I love it when I have one-to-ones here. Because 1, it gives me a target if I got in with momentum, and 2, it might be just enough to give me the bounce up to my entry. Does that make sense? Pretty cool, right? And these are all the things that just kind of come together in time. But D, if you didn't put that in the room, if you didn't say, but what about the one-to-one, then you might be scared of one-to-ones on the small chart for the rest of your life. So that's awesome. So check this out. Now it's no longer, now I have the potential for one of those momentum trades. Small triggers break through. We'll see if it snaps back to the one-to-ones. And if this one fails, well, then I've still got to look for that trend trade. Does that make sense? Strong top, odds favorable, snap back to the one-to-ones. We'll see what happens. I never know what's going to happen, guys. I don't care what happens. All I know is whether or not my rules are met. And you know what? That was a big push.
Order canceled.
And now my areas are on the wrong side of the correction point. That happened fast, didn't it? And when my areas are on the wrong side of the triggers, maybe I get in with a confirmation bar with risk established. Maybe I say no thank you, that's close enough, right? Two ways to handle it. You got to take it your way. All right. Zorro. In, out, in, out. That's a lot of work. That's a lot of work. It just didn't make it. So Zorro, one thing with these jumping in trades, right? The old JTFI. They are so much more effective with odds favorable momentum. When you have weak triggers, it's much harder to feel confident that that market's going to push, which is evident in your entry, your exit, your entry, your exit. You were lacking some confidence in this trade. My guess is because you didn't have odds favorable momentum. Is it the large trigger sucks up? Sorry. No. That's a large chart thing, Zorro. That's a large chart thing. The gap theory is when, and it's on the large chart, and it's when price reaches like one-to-ones or a mid-band and the large triggers are a full bar away. That's that vacuum that we're looking for. That's that price sucks up to it right there. It's not a small chart thing. Price does tend to return to the large triggers on the small chart. That's how we get our great entries. But it's a large chart termination condition thing. And then guys, if you waited for confirmation, you got a second higher, another divergence, right? They just didn't set up perfect. But Jeffrey, you should have got a good chunk out of that one. Yeah, that happened quick, didn't it, Jen? That was somebody with a lot of money that happened to be 3 ticks right above support. Remember, guys, these fibs are an accumulation of thousands of calculations. Thousands of calculations. 2 to 3 ticks sometimes is all it takes. So you just weigh out advantages. And guys, I think that's probably it. I do believe that is a good week. A lot of great lessons. Andy hitting targets every day. It happened so fast, you filled 2 ticks below the one-to-ones. Yep. Slippage. Slippage. Yeah. I'm excited. I'm going to go have a great weekend. I've got friends coming in town that I haven't seen in a while. It's going to be a good one. Awesome day, especially for a Friday. 4:50 p.m. drinky time. Have one for me, Jen. I'll raise one for you at 5 o'clock as well. You guys have an awesome weekend. I will post up today's video so you guys can go do it and check it out. And I'll see you guys Monday morning bright and early. Take care, guys. Y'all be good.